Everyone's heard that the secret to a good mortgage is getting the lowest rate possible. But what if I told you that the real secret isn't about the rate at all? It's about aiming for zero. Zero balance, zero interest, and total financial freedom. Let's talk about how changing your mindset can save you years and thousands of dollars. Welcome to Mortgage Wise Masterclass. I'm Mike Wise with CMG Home Loans, and today we're kicking off a journey that's going to change the way you think about your mortgage. Over the next few episodes, I'm going to show you why aiming for a zero balance is the real game changer and how the all-in-one loan can help you get there faster than you've ever imagined. For decades, we've been taught the same thing. Get the lowest interest rate that you can, and you've won the mortgage game. But the truth is, the real victory is in how quickly you can pay down that principal. Because every day you carry a balance, you're paying interest, even if it's a low interest rate. The goal is to reach zero. Zero balance means zero interest, and that means more money in your pocket and more financial freedom in your life. Let me give you an example of what I'm talking about. So this is your balance on your mortgage. Your goal is to pay it down. This is the number of years in your mortgage, year 1 to year 30. Now this is what your mortgage normally looks like as you pay it off, right? And right here, year 20 is really where you're starting to pay down more principal than interest on your mortgage. Now, why wouldn't you want to pay it off in 15 years or in 10 years or maybe even 5 years? The goal here is to get to zero faster. And if you can do that, why wouldn't you? In fact, most people on a 30-year fixed rate loan, they're focused on the rate. And anytime they can lower their rate by a half a point, 3/4 of a point, they refinance. That's usually 5 to 7 years in the loan, and they start over again. That pushes their payoff out even longer. So it's 35 years or 40 years, and they keep on pushing the payoff out longer and longer because all they're focused on is their payment. They're focused on their payment, getting their payment down. And if they're not focused on paying off their principal balance down to zero, they're going to pay more interest over time. So let me tell you a quick real life story of one of my clients. Sarah, she was like most everybody, focused on getting a great rate. But once she could realize how she can actually save tens of thousands of dollars by focusing on paying off her balance faster, everything changed. She switched her approach. She used the all-in-one loan, and now she's on track to be mortgage-free in about 12 years instead of 30. That's the power of aiming for zero. But why does zero matter so much? Because the faster you get there, the less total interest you pay. And more importantly, once your home is paid off, you free up cash flow for things that really matter, whether that's investing or traveling or just having the peace of mind. That's what I have. I have the peace of mind that my loan is paid to zero. And the all-in-one loan is designed to get you there faster by making your money work smarter every single day. Let me give you another example of what I'm talking about. So let's take a look at, this is a simulator that we have. And this is a real live story today of one of the borrowers that I have. And we compared their loan, a 30-year loan for $840,000. And over 30 years, they're going to pay almost $1.65 million in interest and principal over that period of time. Now, what if I told you you could pay that off in 18 years, so 12 years sooner, and save about $205,000 in interest by paying it off sooner? Now, I know what you're thinking. There's a lot that goes into this because you're giving up principal today to pay off your loan faster, but you still have access to that cash. But the goal here is the faster you get to zero, the better. If you did this loan and you actually then invested $4,500 after year 12 into the stock market, you would have another $875,000 in net worth in 30 years. Rather than taking that time to pay off your mortgage over that period of time, your net worth is only going to be $2.5 million versus the $3.5 million if you got to zero faster. So at the end of the day, the real takeaway is this. It's time to stop thinking about your mortgage as a 30-year commitment and start thinking about it as a path to zero. If you found this helpful, make sure you like, subscribe, and join me on the next episode where we're going to break down exactly how the all-in-one loan works mechanically to get you to that zero balance. I'm Mike Wise, and we'll see you next time.